Hey everybody, welcome to the morning market briefing. It's Monday, August 10th, 2026. Tom, Ben, how we doing?
Doing well.
Monday, man. Let's grind.
Let's do it. Let's get into it. We've got big story coming out of Intel with some stock being sold, but let's open up with Berkshire Hathaway getting some cash to work. Ben, has long been speculated that they were waiting for the shoe to drop, so to speak, and now they're just getting going.
Yeah, they're not really waiting anymore. And, a lot of people were using this as fodder and fuel to say this is why the market's going to go down because Berkshire Hathaway is hoarding a lot of cash and Warren Buffett always kind of knows what's coming around. And now they're deploying capital. They bought a home builder for $7 billion. They bought $10 billion worth of Google in that stock offering where they kind of got a little bit of a sweetheart deal, but they're still a little bit down on that, I think, this morning, depending on where Google is trading. And they also bought back $5 billion of their own stock. So, this is where things are right now for Berkshire Hathaway. They're deploying capital in terms of their operating businesses. Geico and Burlington Northern Santa Fe, which is the railroad that competes with Union Pacific out there on the West Coast, they continue to both underperform. Which has been a pattern for a few years now. But their other operating businesses, including servicing, retailing, I think they own Pilot, and some of their manufacturing operations and the utility business. The utility business had profits that were up 27%.
That'll work.
But it's a good thing that it's run by Warren Buffett, because if it was run by anyone else, people would say, man, this utility company is taking the profits.
Gouging.
Yeah. But because it's Warren Buffett and he's very nice, that everyone likes him.
How much of the recently deployed capital would you ascribe to sentiment shift, at least internally, is option A? Option B is just, we just can't sit around and be left by the market. Maybe our view hadn't changed. And then option C is just, hey, we've had issues with Geico, with BNSF. That's option 3, C, A, B, C. So A, shift in mentality. B, we just got to do something. And C, we got to offset some losers.
I think halfway between A and B. I think Google was opportunistic, but so that's more kind of B. But option A, definitely more the case of buying back stock and Greg Abel coming in as the new CEO, wanting to buy something cheap, which is kind of in the Berkshire Hathaway Warren Buffett tradition, and buying the home builder in a cycle where it's really not been worse for home builders for about 15 to 20 years.
Yeah.
I will say that as someone who consumes quite a bit of golf content, Taylor Morrison has suddenly become a big advertiser during PGA Tour events, which I feel like they definitely weren't before. And it was a company I was sort of very cursorily aware of. And now it's suddenly like every fourth commercial, I feel
we should start we've talked about it, I imagine, on this show at some point in the last 6.5 years, call it, that people that advertise on podcasts, that's kind of your list of your next companies to go under.
Yeah.
I'd be curious if there's some kind of comparable index by sport, where it's like golf advertisers. How do those companies perform?
Man, Service Now is a big one.
Yeah.
BDO. Wyndham Hotels is the premier sponsor this weekend, which I don't think is really up to snuff. I mean, I feel like that's a pretty low level hotel chain.
I don't understand the mentality behind. I mean, I'm sure some people have done the research on the marketing angle here and say it's worth our spend, but I don't understand what the return is in building a home builder brand. I don't know if people go to and say, man, 10 years ago, I'm buying not a new home, but I'm buying one that was originally a Taylor Morrison home, and therefore I'm going to buy this home over another home that I like.
Yeah, I don't know that there's tons of brand loyalty unless you're in the stratosphere in which you're, this guy built a custom home for me and I'm going to do another. I'll use him again. But that's not something they would advertise.
Mm-hmm.
Yeah, it's interesting. If anything, maybe it's just the Berkshire effect. Like Berkshire's always been very vocal about what companies they do own, and that is a tailwind for them. So almost like you see the ad, you're like, what's Taylor Morrison? You're like, oh, it's a Berkshire stock. Like, maybe I should buy some Berkshire stock. I mean, I really don't know what else.
I mean,
would be.
the other all-time dumb advertising thing that I still obviously it makes sense because it's 50% of the commercials during a football game is pickup trucks.
Yeah.
I mean, it is well known that like people are fiercely loyal to the brand of pickup truck that they drive. Like I don't know who you're winning. Where you're like, oh man, I was a Ford guy, but now I got to go GMC. I got to make the switch.
Yeah. And then I suppose
That's how you lose
I
friends.
suppose there are Ram people out there, but
they're out there. Intel, so not buying back stock, issuing $15 billion of stock. J.P. Morgan, Goldman, Morgan Stanley, and Citi are all joint on running this book. What's the angle here other than, well, we can do it?
I think they're expanding capacity a lot, and I think that this is going to just result in more supply coming to market, more supply of stock, but then also more supply of chips down the line, which I think is going to be disinflationary. And I think, again, when we're talking about this, what does all of this high prices in memory and chip making equipment mean? A lot of people are trying to extrapolate this as this is going to ripple through in terms of inflation to a bunch of other products. But I think what it's actually doing is you might have a very short-term bump of inflation, but it's because all of the means of production are being purchased and installed. And once those are purchased and installed, you're actually going to have a supply response that is not going to be, which is going to potentially even exceed the demand and result in disinflationary tech and maybe even deflationary tech, which has been a hallmark of technology since technology has existed. The thing is, technology improves and gets better at cheaper price points. The computer, I remember when we first bought our first home computer was a Gateway in 2002. And I remember buying it, and it took it was like a month and a half long process. And I think it was like $2,200, and that was cheap at the time. And now you can get much, 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 much more powerful tablets for $500 or $600.
Couple $100.
Yeah, it is crazy. Taiwan Semi reporting their July sales numbers, certainly supportive of what they say is going to be 46 to 48% growth in revenue for this third quarter.
Yep, that's good news for NVIDIA, really, and probably good news for Apple, although Apple got a downgrade this morning because they're not doing an all-glass iPhone, which I think was pretty much well-known at this point.
Yeah. No way.
So,
and tough days for the farmers out there. Taylor Farms now recalling pretty much anything with jalapeños, saying they've got a salmonella outbreak. I mean, it's just a tough time to be into vegetables. Whether you're growing them, eating them, whatever it may be. Tom, I feel like you've got some thoughts.
Yeah. Sources closest to the matter are saying that I had a buddy in town from France, former rugby guy. We went out and got tacos on Friday night, and sources closer to the matter are saying that I have been in a world of hurt ever since.
Oh, no.
So is it salmonella? Is it Cyclospora? Who's to say? I'll tell you what it is. It's not awesome.
Not great.
So, but I'm getting thin. I'm getting all
He's
the toxins out.
He's leaning out.
It's feeling good.
It's worth it.
What I would say, just a kind of a public health announcement here, is Bactrim, Bactrim, is the antibiotic for Cyclospora, and it can also be for salmonella. So the problem is
get you some.
Yeah. Doctors don't like to prescribe it unless you have a lab, and just ask your doctor for a Bactrim prescription if you start having an episodes, because it really.
Can your dad be my doctor?
Dr. Dre.
We'll just set up a like the hims and hers just for Bactrim.
Yeah. Well, they do those weird the Patriot packs or whatever, where they give you ivermectin and a Z pack just in case.
You never know.
You never know when the world's going to collapse.
Yeah, got to get the Bactrim in there. And Treasury Wine Estates taking a $500 million charge. Tough times for the winemaker.
Yeah, so, I mean, they're taking a $500 million charge, which means that the value of this wine was a lot more. I remember, I wanted to put this in the notes today, one, because it was a little bit of a slower day, but two, because I have a little bit of a story here. In 2013, there was this Treasury Wine Estates was run by a guy by the name of David Deary. He was an Australian guy who was super into wine.
Norway.
And he really wanted to grow what he called the masstige wine. So it's between like the mass market and the prestige.
Well, I saw that word in there. I was like, that must be a winemaking term I'm not familiar with. And instead, it's a really dumb portmanteau.
It's like freemium.
Yeah.
Uh-huh. And what he ended up doing was he produced so much wine in California that he's like, we're diluting our brand. So he dumped it all into the ocean. Like,
Nice.
and this one was, I think, like 30 million liters or something of wine. And so they took a big charge back then, and the stock just got smashed.
Are there environmental
Yeah.
penalties for dumping wine into the ocean?
Just have a bunch of drunk
Shrimp.
fish
Yeah.
floating around.
The drunken clam.
Deadliest Catch had a great year that year, though.
Yeah.
People are saying. But what the implication here is that they're trying to dilute the brand, or they were diluting the brand because there were such good harvests at the time, and now we're seeing the same thing kind of replay itself. It's new CEO because Deary is long gone from the company, and they're dumping. They're taking this charge on wine. And the thesis, our original thesis on Treasury Wine Estates, was it trades at less than book value. So book value is the sum of the assets minus the sum of the liabilities. Well, in those assets, you have the value of inventory. And a lot of people like to look, I mean, even Warren Buffett will look at the book value of a company as kind of the underlying, everything goes south, what can I get for these assets? But when you do financial analysis, you really have to understand what the quality of those assets are. Because
Will they be poured into the ocean?
Yeah, because if the inventory is not worth what the inventory says, then you're gonna get, then that book value is not real. And like when JCPenney was going into bankruptcy, I remember we were doing a liquidation analysis of the company, and it's, well, do we value the inventory at 70% of cost, or do we value it at 40%? Or 20%. What are they going to get from this inventory? And I think that that's something good for all young analysts out there to remember, is that the value of the inventory is not the gospel truth.
Yep. Iran update. They're naming a package in order to reopen the Strait. Stop me if you've heard this before, but they want billions in payments from the U.S. They want to free up their frozen assets. They want to remove American troops from the region. They want the end of the U.S. blockade. And they want an end to military action against militia allies in the region. How does this deviate from what they previously wanted?
I don't think it does at all,
Yes.
other than it shows that there's no compromise they're willing to do, because I think that they have Trump, who wants out of the war, and they think that they can basically dictate the terms.
I mean, I got bad news for you. The guy who's doing the freezing of the assets and all of the manipulations is a guy named Scott Besson, and
He's going to tweet about
he's going to cut your throat and put you in a dumpster.
and then
So,
tweet about it.
Yeah. So sorry.
Looking ahead this week, we've got small business optimism coming out tomorrow morning. We'll get the federal budget balance, some earnings still trickling in. What's top of mind for you, Tom?
I mean, I'm interested to see how rates move this week. I mean, there's been a lot of data that's moving in the direction of the rates should be lower, but the market continues to reject that thesis. I mean, the jobs number, whether you choose to believe that it was bad and overstated or bad and understated, was not good. The only sort of rate should be higher narrative I can see on there is that what we did see is the domestic job gains are continuing to dominate, and foreign-born job losses are continuing to mount. And so you combine that with the strength in the ISM, and perhaps you could argue, yeah, we're starting to grow the economy in a more functional, natural way, and rates should be higher. But you dovetail that with the fact that inflation, I believe, is still overstated and will be coming down as a function of oil prices. I just think that the market is they're really rejecting reality right now. And I think a lot of that is the reporting on it. I was thinking about this over the weekend. It's actually probably net positive for society. And stop me if you think I'm wrong here, but that the media is so against Donald Trump. Because what it does is create a natural sort of meeting point where it's like, we had all this stuff with ICE. There was so much coverage of the negative externalities of the ICE raids that we've sort of settled into this happy medium where there are lots of deportations, but nobody's necessarily getting shot in the street, or a bunch of weird looking people are blowing whistles at people in Minnesota. But the situation is that the financial media continues to be so overblown, and they aren't getting questioned in the same way that the normal media is, where they're like, hey, all this Fauci stuff is looking pretty bad now, and you guys were just lifting this guy up as the messiah. And it turns out he was just doodling in his notebook about how cool he was and how COVID actually wasn't that bad, but it was pretty cool for his bottom line. You've not had that yet with the Fed, where it's like everyone's like, the Fed is the most exalted, most prestigious thing in the land. What an institution. They need to be so independent. Everybody continues to hammer that point, and no one's like, hey, they actually did a pretty bad job.
No one's saying that.
No one's saying that. So right now, I feel like that middle ground has not been met. We're actually pushing away from reality and into what is being written constantly by everyone. The financial news media. CNBC talks about it all the time. Oh, Kevin Warsh has no credibility, and that's why rates have to go higher. I just fail to see that as true. I mean, you start looking around at the data, the ones that you can, really think are strong or actually accurate ISM real-time data, that's all showing towards lower rates. The jobs market, which has been overstated by 80,000 jobs a month, is now, off by 100,000 jobs. So you can assume it's actually off by 180,000 jobs, which would indicate that they probably need to cut rates. I think there's so much data pointing towards we should actually have lower rates, or at least have rates come down naturally to a lower level because they've sold off so much, but we're just not seeing it.
Yeah, we have some issuance this week with the 10-year and 30-year auctions. I'm curious, once that issuance is out and passed, if we can start to move a little bit lower. We also get the CPI, so that could help. But getting that issuance out of the way, I think, will help as well.
Yeah,
we're just living in crazy land right now, I think.
Yeah. Ben, anything top of mind for you other than those things?
No.
Cool. All right, we'll wrap it up there. We'll be back tomorrow. Y'all have a great day. Talk to you soon.